Welcome back, everybody, to another deep dive. I am so excited for this one. We're going to be looking at a recent market update from PantheonAI.
Oh yeah, PantheonAI, they're like your information co-pilot.
Yeah, exactly. They cover, news, business, tech, investing, finance, and all things AI.
Yeah.
So you know how dense financial news can be?
Oh, absolutely.
Today, we're going to cut through the noise, highlight what you really need to know
Love it.
to stay ahead of the curve.
All right, let's do it.
So let's start with that market overview. You've been following the markets. It's been a bit of a mixed bag lately. The S&P 500 had a modest gain. The Dow Jones is feeling a bit more bullish, but the Nasdaq took a little dip, almost like a financial tug-of-war.
Yeah, I love that analogy because it really is. The S&P 500 edged up just a little bit, 0.13% to 6,009.
Okay.
While the Dow Jones jumped 0.71% to 44,865.
Wow.
But on the other hand, the Nasdaq dipped 0.26% to close at 19,646.
Okay.
Here's what's interesting. The Russell 2000, which focuses on smaller companies, actually saw a healthy rise of 0.56% to close at 2312.
So what do you think that tells us about investor confidence? Are they maybe feeling a little bit more optimistic about smaller companies right now?
It's certainly possible. Investors might be seeing more growth potential in those businesses, particularly in innovative sectors that aren't as heavily represented in the larger indexes.
That makes sense. That makes sense. And speaking of innovative sectors, we can't ignore the crypto world. Bitcoin is up over 2% to 105,836, and Ethereum is having a fantastic day with a 4.8% jump to 3,265. What is driving these gains?
Well, cryptocurrency is definitely known for its volatility, but these recent gains could point to increasing mainstream acceptance and adoption. More and more institutional investors are dipping their toes into the crypto waters, and that can definitely influence prices.
Yeah, it's really fascinating to see how crypto is evolving from like a niche investment to a more established asset class.
Yeah, for sure.
So we've got this tug of war in the markets. Crypto is doing its thing. But what are the underlying forces at play here?
Well, you've got the usual suspects, right? Interest rates, inflation, and geopolitical events.
Right.
These factors create this really complex web of interconnected forces that can influence market sentiment. So, for example, rising interest rates can make borrowing more expensive, which can then impact corporate profits and investor confidence.
Makes sense.
And of course, unexpected global events can create volatility and uncertainty.
Right. It's like trying to solve a giant financial puzzle.
Exactly.
You need to look at all the pieces to understand the bigger picture. So let's dive into some specific sectors and see what's happening on the ground. Fintech seems to be a real standout right now. Mastercard just had a stellar earnings report, and their positive outlook is making waves throughout the entire sector.
Yeah. Mastercard's success, particularly their focus on expanding into new areas like digital identity and cybersecurity, suggests that the future of finance is moving towards a more integrated and secure digital experience.
So you're saying this could potentially impact areas like online banking and e-commerce?
Absolutely. These innovations are not only improving security, but also making online transactions more seamless and user-friendly.
That's incredible. It sounds like fintech is really pushing the boundaries of what's possible in the financial world. Now, what about the tech sector? We've seen some volatility there lately, but are there any bright spots?
I think Nokia's recent return to profitability is definitely a bright spot. It suggests potential stabilization in the mobile sector after a period of intense competition and disruption.
But isn't it risky to invest in a company like Nokia that's been struggling for a while? What makes you think they've turned a corner?
Well, Nokia has been restructuring its business and focusing on growth areas like 5G infrastructure. Their strategic partnerships with major telecom operators are also giving them a competitive edge. Of course, there are still risks, but the recent performance suggests they might be back on track.
Okay, that's good to know. So we've got positive signs in fintech and tech, but what about the job market? How are things looking on that front?
Well, actually, the latest jobless claims numbers are very encouraging. They're down 16,000 to 207,000, which is a sign of resilience in the labor market.
That's fantastic news for the economy. More people working usually means more spending and overall stability. It's a good sign that we're weathering some of those economic uncertainties we talked about earlier. Now, what about traditional media companies like Comcast? Are they struggling to keep up with the rise of streaming services?
Comcast is a fascinating case study. They actually beat earnings expectations,
Okay,
but they're still losing subscribers.
interesting.
It highlights the ongoing challenges faced by traditional media companies as they try to adapt to a rapidly changing landscape.
So it makes you wonder how they're going to stay competitive in the long run.
Right. They've got their own streaming platform, Peacock. But it's facing stiff competition from established players like Netflix and Disney Plus.
Right.
They're also exploring partnerships and acquisitions to expand their reach and diversify their offerings. It's a challenging situation, but they're not giving up without a fight.
I love that. Now, speaking of fighting for market share, we have to talk about Tesla. They're blurring the lines between a car manufacturer and an AI company, and that's creating a lot of buzz among investors.
Tesla is a company that really defies categorization. Their advancements in electric vehicles are undeniable,
Yeah.
but their forays into AI, particularly with their self-driving technology, are raising eyebrows.
Yeah.
It's a bold strategy, and it remains to be seen whether they can succeed in both arenas.
But isn't it risky to be a jack of all trades? What are the experts saying about Tesla's ability to succeed in both areas?
There are definitely concerns about their ability to maintain focus and profitability while pursuing such ambitious goals.
Right.
Some analysts believe they should stick to what they know best, making electric cars.
Okay.
Others believe that their AI ventures have the potential to be game changers, not just for Tesla, but for the entire automotive industry. It's a gamble for sure, but one that could pay off handsomely if they play their cards, right?
Okay, let's shift gears for a moment and talk about the aviation sector.
Ah.
Unfortunately, we have to address the recent tragic collision involving American Airlines. It's a stark reminder of the vulnerabilities within that industry.
Absolutely. Incidents like this, while rare, can send shockwaves through the sector, impacting stock values and investor confidence. It underscores the inherent risks associated with aviation and the importance of ongoing safety improvements.
Yeah, it's a sobering reminder that even in a technologically advanced industry, human error and unforeseen circumstances can still have devastating consequences. Before we wrap up this part of our deep dive, I'm curious about the retail sector. Are they holding up in this ever-changing market?
Well, the retail landscape is incredibly dynamic, with online giants like Amazon continuing to disrupt traditional brick-and-mortar stores. However, there are still success stories to be found.
Yeah.
Take Tractor Supply, for example.
Yeah.
They cater to a specific niche market and have been performing relatively well.
Okay.
But even they're not immune to challenges.
What kind of challenges are they facing? I thought they were one of the stronger players in retail.
They recently missed earnings expectations and issued a cautious outlook for the coming quarters, which spooked investors a bit. It's a reminder that even companies performing well need to adapt and innovate to stay ahead of the curve in a constantly evolving retail landscape.
So even in a sector that seems to be doing well, there are always factors to consider and potential pitfalls to avoid.
It's a lot to take in, isn't it? We've covered a lot of ground already, from the overall market trends to specific sectors. We're starting to piece together this intricate financial puzzle, and it's definitely a fascinating one.
Yeah, it is.
I'm excited to keep going.
You too.
Let's take a quick break, and then we'll come back and continue our exploration.
Sounds great. And we've only just scratched the surface. Remember, the U.S. market is just one piece of the global economic puzzle.
That's right. It's time to broaden our horizons and take a look at the global landscape. What are some of the key trends and developments happening in other parts of the world?
Well, we've touched on the U.S. economy's resilience, but Europe is facing a different set of challenges. Growth has been sluggish, and there are ongoing concerns about energy prices and political stability. It sounds like Europe is navigating some pretty choppy waters right now. What factors are contributing to their slower growth?
Well, the ongoing conflict in Ukraine has definitely had a significant impact, disrupting supply chains and creating uncertainty. The energy crisis, exacerbated by Russia's reduction of natural gas exports, has also hit European economies hard, leading to higher inflation and reduced consumer spending.
So Europe is dealing with some serious headwinds. What about Asia? We often hear about the rapid growth in that region. How are things looking over there?
Asia is a mixed bag, really, with some countries experiencing robust growth while others face challenges. China, despite its recent economic slowdown, remains a major player on the global stage. And India, with its young and growing population, is also emerging as a powerhouse.
It's amazing how these different regions are experiencing such varying economic conditions.
Yeah.
How do these global trends tie back to the markets and sectors we discussed earlier?
Well, the global economy is incredibly interconnected. Events in one region can have ripple effects across the world, impacting everything from stock prices to consumer behavior. For example, a slowdown in China could reduce demand for commodities like oil and copper, affecting prices and potentially impacting companies in those sectors.
It's like a giant game of financial dominoes.
Exactly.
One piece falls, and it can set off a chain reaction across the globe. That's why it's so important to stay informed about global events and understand how they might impact our investments. Speaking of staying informed, What are the experts saying about the current market conditions and what might lie ahead?
There's a sense of cautious optimism, but there are also warning signs. The U.S. market is showing resilience, but inflation remains a concern, and interest rates are on the rise. Geopolitical tensions, particularly in Europe and Asia, continue to add uncertainty to the mix.
So it sounds like we're walking a bit of a tightrope, trying to balance optimism with a healthy dose of caution. What are some of the key risks investors should be aware of in this environment?
Well, inflation is definitely a major concern. If it continues to rise, it could erode consumer purchasing power and lead to even higher interest rates, potentially slowing economic growth. Geopolitical risks are also top of mind. The conflict in Ukraine has already had a significant impact, and tensions between the U.S. and China could further disrupt global trade and financial markets.
It sounds like investors need to be prepared for a potentially bumpy ride. What steps can they take to navigate these uncertain times?
Diversification is always key. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographic regions. This can help mitigate risks and potentially enhance returns. Staying informed is also crucial. Keep an eye on economic indicators, global events, and market trends.
And that's where a tool like PantheonAI can be incredibly helpful, right?
Absolutely. PantheonAI can be your financial co-pilot, providing you with the insights and analysis you need to make informed decisions. Their platform covers a wide range of topics, from news and business to tech and finance, all with focus on AI-powered insights.
It sounds like a pretty powerful tool for anyone who wants to stay ahead of the curve in this rapidly evolving world. But even with all the information and analysis available, it can still feel overwhelming at times. What's the one key takeaway you want our listeners to walk away with today?
I think the most important thing is to remember that knowledge is power. The more you understand about the markets, the better equipped you'll be to make sound financial decisions. Don't be afraid to dive in, explore different sectors, and stay informed about global trends. And remember, there are tools like PantheonAI that can help you on your journey.
That's such a great point. And it ties back to the idea of this deep dive. It's all about taking a closer look, exploring the nuances, and coming away with a deeper understanding. We've covered a lot of ground today, from the U.S. markets to global trends, and we've even explored some of the risks and opportunities that lie ahead. It's been a wild ride through the financial landscape, hasn't it? But before we wrap things up, I want to bring it back to you, the listener. Given everything we've discussed today, from the cautiously optimistic U.S. market to the rise of fintech and the importance of global awareness, what sectors or trends are you most interested in following, and why?
Yeah, that's a fantastic question to ponder. It really challenges us to personalize this whole deep dive, doesn't it?
Yeah.
What piqued your interest? What stood out to you as a potential opportunity or area to watch closely?
Personally, I'm really intrigued by the intersection of tech and finance. The innovations happening in fintech, like Mastercard's push into digital identity and AI-powered security, are fascinating. It makes me wonder how these advancements will shape the future of banking and payments.
It's a space ripe for disruption and innovation, that's for sure. And don't forget about the potential impact of AI and machine learning on investing itself. We're already seeing the emergence of robo-advisors and algorithmic trading platforms. It makes you wonder how these technologies will change the way we invest in the future.
That's a great point. And what about the global landscape? Are there any particular regions or markets that you're keeping a close eye on?
I'm particularly interested in the rise of emerging markets like India and Southeast Asia. They have young, growing populations and are rapidly adopting new technologies. There's a lot of potential for growth and innovation in those regions.
It's exciting to think about the possibilities both in terms of investment opportunities and the broader impact on the global economy. It feels like we're on the cusp of a new era in finance, doesn't it?
Mhm.
With technology advancing at such a rapid pace and global markets becoming increasingly interconnected, the future is full of possibilities.
It certainly is. And remember, you don't have to be a financial expert to participate in this exciting evolution. Staying informed, being curious, and utilizing tools like Pantheon AI to navigate the complexities can empower anyone to make smart financial decisions.
Well said. It's all about taking that first step, diving into the information and figuring out what resonates with your own financial goals and interests.
Exactly. And never stop learning. The financial world is constantly evolving, so staying curious and adapting to new trends is crucial.
That's some great advice. So to wrap things up, I want to encourage everyone listening to keep exploring, keep learning, and keep diving deep into the world of finance. There's a whole universe of information out there, and with the right tools and mindset, you can unlock its potential. Until next time, happy investing.